Hey, good morning, guys. How's it going today? It's now November the 24th. It's my last day in Rome. It's Saturday. It's about 2 in the morning. Still got one full day ahead of me. And I wanted to give you guys an update. Excuse my lack of energy. It's extremely late right now. It's about 2:45 in the morning. And I thought it was important enough to give you guys an update and to give you guys an idea of where I stand in the market as well. So I'm quite down on my position. I think I'm down $1,800. My base price is about 4,700-ish or something like that on about 6 or 7 Bitcoins. I can't remember. I haven't pulled out my 2FA once yet here since I got to Rome, to be quite honest. But I'm not really worried, right? Everybody takes losses in the market, and yeah, clearly I've been up quite significantly in like June, July, August, September. Haven't had a down month or a down week yet this year. And I've been going on some massive winning sprees, right? Where I've been doing very well some days. And yeah, but anyways, my mind's not really in trading mode. I'm more so in a vacation mode right now. And of course, anybody that's in Rome would, or on vacation in general, would not be too interested in trading. But I'll give you guys an update when I get back to France in Marseille. And I'll show you guys my position transparently and everything as well, right? Like I always do. So let's just make this short and sweet. And let's just talk about what's been going on because we ended up spiking about $100 tonight, which is not significant, but based on candlestick analysis and just based on how price action is looking there. I'm so confused right now by what's going on. There could be capitulation in terms of the bulls just completely giving up, and we break down to a very bearish level, which is going to be incredibly scary because it could be a very violent drop. And at the same time, right, we've got these big wigs that work for gigantic institutions making pulling a rabbit out of their hat and saying, oh, we could go to 15K. We've got guys who are claiming 2K. We've got guys claiming 3K. Nobody knows anything that's happening in the market, and anybody's guess is honestly as good as mine. And all that we can do is try to look for signs for a short-term gain, especially if you're a swing trader and a day trader like myself, right? So the general rule of thumb, in my opinion, is depending on the trading range that we are at, right? Everybody is saying something like this, okay? They're making this argument right now where I'm seeing tons of quote unquote professional technical analysts on YouTube, etc. They're saying that because there's the lack of volume in these low RSI ranges, then it means that we are most likely going to go down because there's no volume to support, right? Does that make sense, guys? There's no volume to support, so we are most likely going to drop down, even though we are trading on a very low range of the downtrend, right? So we're going down. So let me just argue this rationally for you guys. People are saying that we are going to drop lower because there's lack of volume at the current support that we are at now. Now let's look at the inverse of this, okay? Let's look at the opposite of this. On an uptrend, right? That would be like saying because there's lack, like when we're very, very overbought, okay? That would be like saying because there's lack of volume, we are about to go up, which is the same thing as saying on the downtrend, because there's lack of volume, we're going to go down further. So I personally look for signs when I'm shorting for volume decreasing because the market is likely to reverse the other way since we are trading on the higher range of the overbought region. Does that make sense? So we have to look at it from so many different perspectives of how volume is treated. And in my opinion, because we are trading on the lower range right now in a very oversold region and there's lack of volume, to me, it makes more sense that the bears they just can't sell off anymore, right? So it's kind of difficult the way we see volume. So it's not the best indication right now, in my opinion, right? So let's take a look at the long versus the short tables just to see where these guys are trending. I'm going to look at it on the Bitfinex longs. We got a massive liquidation, right, in the past few days. As you guys saw, we're at 27,000 Bitcoins long right now versus the short table where we're at 27,000 shorts. So Bitcoin long versus Bitcoin short right now, we are literally dead in the middle. That's what we're seeing so much tension right now between the bulls and the bears. We're literally 100 Bitcoin only, which is like $400,000, next to each other side by side. I'm seeing so many technical analysts saying that we're just gonna drop off the face of the planet right now to like the 3,000 regions, but they don't even have a 200 moving average on their short, or sorry, on their chart right now. So how could I possibly believe that there's going to be a sell-off if they're not even looking right now at the 200 moving average on a weekly? Okay? Not only are they not looking at a 200 moving average on a weekly, but if I go to, for example, an 8-hour chart right now as well. Now, I'm not saying these guys are wrong. I'm not saying that these guys are right, that we're going to drop off of it. What I'm saying is that they're not looking at all the key list of ingredients that indicate why there might be support, okay? Now, you will consider this region right here a bear trapped region. Then we're hitting, we're intersecting a region here as well. That's one support, that's two supports. Is this the actual third support before we get some sort of dead cat bounce, right? That's kind of a big region right now that we're seeing, right, of support. I mean, we're seeing it on the weekly of the 200 moving average. Now, you guys know me better than that. Anybody who's been following me for a long time, you guys know that I'm more bearish than bullish generally. And it's actually really rare for me to be bullish in general for a long period of time. But I gotta put these reasons together for why I see more signs of it possibly bouncing off the 200 moving average, right? Now, we have to also understand it from the perspective of investor level versus swing trader versus scalpers versus day traders. So a bounce to me might be very different than a bounce to you. A bounce to me is usually short term because I'm a very short term trader, right? I don't really hold swing positions, but I just happen to be swinging this particular week because I don't have too much time for day trading at the moment. I do miss day trading though, guys. And I've actually got some good news. I'm going to head back to my home city in Manitoba, Canada around December the 13th because I want to be near my family and also near my friends. And sometimes you just want to be home, right? I honestly miss my huge TV. I miss my view. I miss my balcony. I miss actually cooking in my own kitchen. I miss my own bed. So it just makes sense for me to head back home a little bit. But I do have some plans to visit overseas to my home country in Laos very, very early January, actually, because I don't want to be near the cold. And you know what? Christmas is pretty important to me, to be around family and mainly friends, actually. My family doesn't celebrate it at all. So I don't want to, be, for example, in France during one of the most important holidays of the year, right? So anyways, just wanted to give you guys an update with where I stand as well. So what I'm saying is that a lot of technical analysts are missing the fact that there's a huge trend line support that's sloped right now that's been trending since February the 6th. Not only that, we are also seeing a 200 moving average that's intersecting with the weekly chart right now, right? So a bounce to me might be very different than a bounce to you guys, right? Like if you guys are talking about a bounce, it could mean a huge bounce. If I'm talking about a bounce, it could mean a very small bounce. So it's very subjective. And please keep in mind to always take this with an absolute grain of salt. Because if you don't, and you listen to my word entirely and not your own, that's kind of unwise because it's your money, it's your risk, it's your responsibility. You are accountable for your own wins, you are accountable for your own losses, right? Nobody is responsible for your own successes, and you are always responsible for your own loss as well. So because of those reasons, you should just, make sure you guys are trusting your own decision and only using other people's opinion as a reference. I put it that way, okay? So what we're seeing right now on the daily chart is pretty bullish just based on the candle itself, right? I mean, there's no denying that that's a hammer candle. But are we going to get we didn't get a V-shape correction, which is what every single person wants. This candle actually just closed about 51 minutes ago with a decent hammer candle, but there's no volume to support it, right? That's what the bears would say. The bears would be like, yeah, it's going down because, it's a decent candle, but there's no volume to support it. But then my argument is, all right, well, if we get an uptrend and we're thinking of shorting and we get a bearish candle instead of a bullish candle and there's lack of volume, wouldn't that mean it's going down? And everybody would throw their hands up in the air and be like praising it. Yeah, it's going down. It's a shooting star candle. There's little volume. We can't sustain it anymore going up. Well, the exact opposite argument also applies here as well, right? So I find that a lot of people are subjective in the market with their approach and they're entirely biased. So I think the best thing to do in the market is actually react to it rather than trying to predict, right? And that's why I'm not really a big swing trader or even an investor in general. Sure, I hold Bitcoin long term, but the way I see it is I focus on short-term volatility to catch these swings that oscillates in waves, right? So I think what a lot of people are honestly going to do is they're going to wait until we see a higher high, excuse me, and a higher low, right? So not many people are entering the market right now because they're extremely cautious. And of course, we look at the daily chart. We're seeing the histogram tick up 2 days in a row thus far. Well, today doesn't really count because it's only been 51 minutes into the day. But we did first time got a histogram positive tick upwards since November the 1st actually. So yeah, what does that mean, right? We're getting bullish divergence on the RSI, right? We're getting a higher high and a higher low, but are we actually going to snap out of it? Let's go to 16-hour chart. We're seeing two doji candles, actually a hammer and a doji that's formed with declining volume, with a histogram ticking up as well for a potential MACD crossover. So is it actually going to cross over is the question. What we see is we see the 12-hour with a potential crossover trading on a very low range, and then we see the 10-hour that's actually positively ticking up now in the histogram like I predicted earlier this morning. So are we bouncing upwards? Is this bullish divergence? Can we actually break this RSI? Now let me show you guys something very interesting that you might not have actually noticed, okay? What time frame was it on? Let me just check it out here. All right, let me just get over here to check it out. Okay, you guys see this right here, right? This was the original interim high for the for the RSI, and here's the second one right there. So we are just poking above it, and we actually haven't been in this position where we broke the November 18, right? That's kind of a big deal in my opinion that we're breaking November 18's RSI, right? And even more significant, we're breaking like the 1 hour charts RSI as well, which is kind of like, okay, well, we're getting strength in the market so far. And this tick right here is actually nice, in my opinion, right? We're getting kind of a curvature upwards of like y is equal to e to the exponent of x. That's kind of nice. We're getting higher histogram ticks as well. We're getting that one blue crossover, in my opinion, right? And it comes back to the negative side, and then we get a crossover again. So I'm seeing all these signs of bullishness, but everybody's just wondering like, well, where's the V-shaped correction? Well, not always a V-shaped correction, guys. Dow theory takes a big part into this as well, where it's accumulation phase, and then there's, the public participant phase, and then there's the excess phase where you guys are getting completely left in the dust and institutions completely take over. So I also see a lot of bearish signs as well, right? The bearish signs to me is, excuse me, is, well, are we going to make an ending fifth wave diagonal? Is this actually a fifth wave coming down that's actually very extended? So man, oh man, it's really on the fence right now. But let me paint an image for you guys that you might not have actually seen, okay? Let's say that we're actually drawing this trend line right here, like that, right? Oh, wow, what do you guys notice? This is intersecting many specific points. Wow, what do you notice again? This is actually like a flat that's coming down, or a channel is what I like to call it, right? So does that mean we're going to get one more coming down to like the 4100 to the 4K? Maybe, right? Absolutely maybe. So I would definitely recommend that you guys keep an eye on these specific points, right? That I illustrated for you guys earlier. This resistance that hopefully we break above it and it becomes an actual support. That'd be really lovely, okay? You go to the 90-minute chart, you're seeing positive ticks up on the histogram as well. Like everything is looking decent. But of course, there's a chance for us to break down. It's really difficult to do an EW count right now since I don't have the actual time. So my plans, guys, is if we break above this channel right here, I might actually just buy on strength to get a better base price and then just take a loss at a lower price or with less capital loss, right, in general. It's just kind of maintaining my risk there as well. So yeah, guys, I mean, this is the first time in a while where we're getting some sort of positive fanning outwards for the 55 moving average strategy. I mean, we go to a 30-minute chart as well, right? This is the first time ever in a very long time, okay? We're talking about first time, like, since November the 18th, but that wasn't really, that was losing strength a lot. We take a look here since the downtrend of the 21st where we ended up hitting, the yellow 55 exponential moving average is actually crossing below all these Fibonacci sequence of numbers of the 8, the 13, and the 21, right guys? Sorry if I'm talking really fast. I'm kind of on autopilot right now and I want to kind of prepare for tomorrow, what's going to happen in the market, since I'm not going to really have a lot of time tomorrow whatsoever. And I think it's important to always plan the night before and to also plan the night after, right? Or sorry, the night before and the morning after as well, because then you get it's kind of like doing your homework. You got to study before a test, and you got to study, you got to study during like the weeks leading up to the test, and you got to study kind of the morning before the test or the night before as well. So I'm just trying to get a little bit of homework in here done. So as it stands, guys, this channel will end up dictating whether we break upwards or not. If we do, my target still stands around 51, excuse me guys, 51, 5200, just kind of taking all of this into consideration right here. If it was actually an ending fifth wave diagonal with a very extended fifth wave, which is also making some sort of perhaps a falling bullish wedge, I'm guessing, right? So here's the 51 target that I'm talking about. Now, don't get me wrong, the weekly is still looking bearish, the monthly is still looking bearish as well. And so it's just a matter of how we assign our R units, right? Are we just going to wait until we get a weekly that's bullish and then we enter a trade based on confirmation of an uptrend? Are we going to wait for a monthly chart to have a confirmation, right? It so much so depends. For me, it could be anywhere between the 5-minute chart, the 1-minute chart, the 15-minute chart, the 30-minute chart for confirmation. So everybody's criteria to enter, excuse me, is entirely different. So as it stands, guys, excuse me, we're getting a series of bullish candles. Volume still diminishing though, and I think that this channel could easily dictate whether we break upwards or down, but I don't think there's going to be capitulation quite yet, And also for the first time, once again, we're actually breaking above the 55 EMA, where we're going to get some sort of potential crossover as well, right? So I'm entirely on the fence right now, guys. Like I'm more so leaning towards bearish because we need to test some specific levels before we end up downtrending more. Otherwise, we just assume it's major capitulation and everybody has given up and the market is going to die and just drop, which is great because then we can actually short, right? So as it stands, guys, I don't really have much more of an update than this for you guys. I want to point out that, our side ranges have been broken, that have been resistance as well. On the 30-minute chart, right, we're hitting literally the top of the resistance. RSI is trending pretty high there. It's breaking definitely some resistances. Hopefully that can be a support. So as it stands, guys, the market is brutally unpredictable, put it that way, okay? And because it's brutally unpredictable, the only thing I can do is heed extreme caution for you guys right now, all right? Despite me leaning bullishness, it doesn't mean that it's financial advice whatsoever. It's just to give you guys insight on my specific, I guess, what's going on inside of my head, right? So anyways, I wanted to give you guys my quick 2 cents on this. I still owe you guys a very detailed technical analysis for Elliott Wave. It's about 3 in the morning right now, and I'm going to call it a night, guys. So have yourselves a great night. I very much so enjoyed updating this for you all. And other than that, take care, and I'll see you guys tomorrow, probably in about 9 hours, and I'll give you an update then. Other than that, toodaloo, guys. Take it easy, baby whales. Bye now.